The main focus in the markets continues to be the deteriorating relationship between the US and China. Both countries are raising the stakes pretty much by the day. As you may have heard overnight, President Trump branded China a currency manipulator for the first time since 1994. China responded, obviously, by denying that they have been manipulating the currency and basically saying that the actions that the U.S. is taking is going to unleash chaos onto financial markets. Interestingly enough, we did not have that chaos today. The Dow seems to have stemmed its slide. The Chinese yuan seems to have found a little bit of support and ended the day higher against the greenback. And for the most part, all the major currencies, including dollar yen, rebounded on Tuesday. Now, the dollar-yen move, unfortunately, we think is short-lived because while it seems that China's kind of, released some of the pressure on the gas in regards to their response to the U.S. and the pressure they've been putting on the Chinese yuan, the reality of the matter is that they're probably just taking their time to come up with an appropriate response. The language that we're hearing from China, the language we're hearing from the U.S. Indicates that they're both going to, come and face each other head on, and that, could very well lead to a much more aggressive response by China, not only to shelter their own markets from, the turmoil that we're seeing in their own economy, but also to hit back at the U.S. So the bottom line is that relations between the U.S. and China are going to continue to deteriorate, and that's going to lead to further weakness in stocks as well as the U.S. dollar against the Japanese yen, along with all of the higher beta currencies. So while dollar yen found its way back above 106 today, having fallen as low as 105.50 overnight, I think for the most part that this represents an opportunity to sell on rallies than a near-term bottom. The U.S. has branded China a currency manipulator for the first time in 25 years, and this has largely been called a symbolic move rather than a economic punch to China, because a label really doesn't have much in the way of consequences. And in many ways that is true, because by branding China a currency manipulator, the next step is that it kind of forces the U.S. Treasury to start negotiations with China to remedy the situation through the IMF. But it seems like both sides really aren't in a mindset to have those negotiations, and they may just move to the next step, which is that if an agreement can't be reached, the U.S. would basically start to enact additional penalties. Now, that penalty can come in the form of additional tariffs on China. President Trump already indicated that tariffs could well exceed 25%. Or it can be in the form of the U.S. cutting off contracts to Chinese businesses or cutting off financing. Those are traditional measures, but China does not really borrow that much from the U.S. and they don't really are not that much involved in some of the government contracts. So what we're looking for at the end of the day is China's response. They've already cut off agricultural imports from the U.S. and it'll be interesting to see if they respond in a more significant way by perhaps forbidding a larger swath of businesses in China from engaging in activities from the U.S. So things are probably going to get worse before they get better. So the relief rallies that we've seen in the markets today are probably just that, and we're likely to see further weakness in the weeks ahead.